the only, wait for it, Mad Money.
Sorry to disappoint everyone. I know that they wanted somebody completely different, but here I am.
Let's not get crazy. So, Matt, before I get into dilution and all this stuff, are you worried?
Steve?
Are you worried?
Worried about what?
Well, the tech is down 6%.
Sounds good to me. I bought the SoFi leaps that you refused to buy. I did the 2030s though. I didn't do the 3040s because I don't know. I like certainty.
Oh, you think you're better than me?
I don't think it, Steve.
You know, this guy's got jokes, everybody.
Oh, I don't think it.
Okay. All right. All right. So, Matt, we're down a lot today. The NASDAQ is down over 1,000 points. We have negative 6% on tech. And look, a lot of people are annoyed. I have said that when you buy a stock, you are buying a position in a company that represents all the future cash flow they're going to produce and represents revenue and earnings. If we're buying quality companies, this should look like a sale. A deep sea or red should look like a fire sale. Should Micron be down 12.5% today? Well, nothing fundamentally changed. Now, my own personal opinion, people are raising capital. And I think it got overdone and algos picked it up. Stop losses picked it up. But I think people are raising capital into next week's IPO for SpaceX. What are you thinking with what's going on?
I don't think it's that.
Okay. What do you think?
I think that job reports are good. I think that the market was hoping for 1 or 2 additional cuts this year. And I think that this just solidifies, the good jobs report solidifies that that's likely not to happen, right? I mean, if jobs reports were bad, inflation were going their opposite direction, then, you know, I think that you could see a little bit of love in the market still, but I think you're seeing people recognize that potentially even rate hikes are on the table.
We're going to come back to that in a second. I promised everybody it would be a good ring. Matt, you may want to close your ears. We are closed for the day, closed for the week. The NASDAQ at 25,713 down, 1,117 points. The market is closed. Was that better, everybody? Was that better? The cowbell. That was loud. That was loud.
It's only 85 seconds late.
Well, it's the market closes at 4 o'clock. I started ringing it at 4 o'clock. Market is closed, everybody. The market is closed. The S&P down 2.63%. The Dow Jones down 1.35%. The NASDAQ having an ugly day, down 4.16%, everybody. Matt, go on with your thoughts.
That's pretty much it. I mean, I just think that the market's come to the realization that, one, you were 85 seconds late to ring that bell, and then two, you're trying to act like you're trying to gaslight everyone and make it seem like you aren't, and then
you're trying to
there's raises. There's raises.
I mean, I started ringing it at 4 o'clock. I didn't want to interrupt you.
I appreciate it. I was just joking with you. I'm not actually upset. I'm partly upset.
It's okay. It's all right. So you don't think that we're getting cuts? You think the job reports was that good and it took the steam out of the market with potentially getting cuts?
I don't. It's about perception, right? So I can't guarantee one way or another. But my prediction is that I think that it just introduces uncertainty about which way we're going to head. I'm not thinking that we're going to be raising. I don't think that we have enough data as of yet to raise. But I just think that with where we're at, cuts seem more likely to be off the table, which I think obviously puts a hamper on things. And that's likely why you're seeing these equity raises. And so, like myself included, right? I mean, I've been looking to refinance some debt that I was accumulating over the past 2-3 years with purchasing rental properties, and I can't do that now, like because the rates aren't coming down. And so if it ends up being in the same way where the market's still running hot, well, you can't be cutting in a hot market. Like, and I know we've talked about this in the past, but I did want to bring this into the room as well, because Graham Stephan actually did a really good video the other day, and I don't really always watch Graham's videos, but I mean, we do have going on $40 trillion worth of debt at this point, and paying 3.5-4% on that is no bueno, right? Like, you're looking at $1.5 trillion worth of just interest payments these days on an annual basis, just to keep that debt in the air. That's not even like adding physical physical payments and principal payments down and taking it off the book. So that's literally just to keep the debt at 40 trillion. And so his thought was, well, are you going to raise taxes to Kingdom Come, or are you going to, is Warsh going to artificially lower interest rates to say 2%, where you're kind of in a middle ground, right? You're not lowering to zero interest rate policies, but he kind of referred to post World War II, which I think was actually pretty comparable to a time that we're at right now, where the debt to GDP was around 110%. And the thought around that was, we were just after World War II. We needed to get the debt down, etc. At the end of the day, I think they pegged it at 2.5%, and that could be the reason why, regardless of inflation, etc., we ended up having kind of the 60s and 70s inflation issues because of that. But who knows? This is a can that you kind of had to kick down the road.
So I want to show you something. So I'm on the opposite side of this, and for a very specific reason. Take the debt from the U.S. government out. Total U.S. consumer debt 2025, $17.94 trillion. Now, this was all updated April 2026. Average U.S. household debt, $104,000 and change. Average credit card balance, $6,500. Average credit card rate, APR, 21.59%. This is, and we all know this country is built on debt. I think that we're in a situation where, and I've been very clear about this, the only thing that is going to help is lower rates. And we may get a little bit of hotter inflation because of lower rates out of the jump, but it will get sorted out. The carrying cost on debt is too much. In addition, the largest expense at some point for the U.S. budget will be its interest on the debt if we keep going at this rate. Like, we need lower rates in order to make sure, and I know the job reports is not showing this right now. I know that right now we have a good economy and we are seeing net plus jobs. At some point that could change. And we have to make sure that companies can tap the debt markets at cost of capital that makes sense to make sure that we have a booming economy for new job entries. It's very important.
I think that's because you're not seeing it come down as fast. I think that's why you're seeing the Googles of the world just issue debt, because what they're thinking is, well, if we're being valued at a price to earnings of X and we can raise debt at X, why would we tap the market at 4.5-5%? It just doesn't make sense. So,
well, you mean issuing shares, not raising debt.
Sorry, that's what I meant. Yeah.
I don't know if I
switched it. Sorry, I have like 18 different people are like texting me about check in with Airbnb and God knows what. So sorry.
Yeah, I mean, look, we have a situation where debt is a problem. We all know that. Debt is a problem. But I am still hopeful that we get 2 cuts this year. I don't know if we're going to get it. It doesn't look like we're going to get 2 cuts, but we may get a cut. I don't know that we have to get increases. I'm not ignoring the chat. I'm just moving things around on my screen. I will get back to the
ban that guy. I'm tired of his shit. I don't know who he is. I'm just gonna start banning people, Steve. Just gonna start banning people.
Little Rock Soccer, thank you very much. We need the bell at 4 p.m. and we need it like we were at Mississippi State football game. It was the best ring of the week, though. Practice makes it better. You know what? I'll try to get better with the bell ring. I appreciate it. Thank you. So, look, I'm looking at this as a buying opportunity. I think that this is healthy and it can get worse. But you know what? If it gets worse, we're going to keep buying, at least on my end. Keep buying. Got to keep buying. And thank you so much, Cash. It's Friday. Can we have Real Mad Money karaoke? Teddy Swims Bad Dreams.
I don't know if I know that one.
I don't know that one.
I mean, I'm cautiously optimistic that it was just what we were kind of seeing with the jobs market. I think you're onto something. I think it's the uncertainty whether or not we're still going to get 2 cuts. I think that's what everyone was kind of pricing in. But I mean, my portfolio is up, in the past half hour, about 1%. So maybe we're seeing a little bit of relief on this. Who knows? I'm cautiously optimistic that that things will kind of persist. I was happy enough that at the bottom, after Amazon noted that they might issue shares to avoid debt, that and then Meta got hit as well, probably at like 1 or 2 o'clock. I forget what it was.
Well, Meta said that there was a report that Meta was going to issue shares.
Which one it was. I took the opportunity to thinking that there was going to be a V recovery to an extent. And so I bought, I think it was like the 585 or 587 and a half for Monday for Meta and made a good like 30-40% on those. But I think that people need to recognize like this market is running extremely hot. We have been running hot, and I'm not saying that this pullback is like completely warranted. I think it's a posturing exercise, but on the grand scheme of things, with total S&P 500, total Qs, we're up massively for the year. And I still think that people like don't completely comprehend like the markets go up, the markets go down. It's so funny that when you're up 20-30% in a year and then you go down 5%, everyone loses their mind. Comparable to Michael Saylor selling 0.004%, and Steve thinks that Bitcoin's going to zero. I mean, it's just it's all very interesting.
Well, year to date, the Qs are up 15%. This dip means not much. It's a one-day dip. We get these dips. We've gotten similar dips before this year on a year to date. And let's look back a year. You get dips. 5 years, you get dips. I mean, this is what happens. These are buying opportunities. These are not run and hide. These are buying opportunities. The question is, in what? Now, you can take your pick of great quality companies, but buying the S&P consistently, you're going to catch everything. And I do believe the market can go lower. And you know what? If it goes lower, so what? You don't recognize a gain or a loss until you sell. And if you're buying assets to sell tomorrow or next week, nobody can predict that. You got to go with what happens. But if you're buying assets for the long term, looking at your account every 5 minutes is not healthy. Looking at the market every 10 minutes is not healthy. And getting stressed out when you see a lower number on the screen, if nothing fundamentally changed, is not healthy. Look, we didn't even go into a bear market getting into a war with Iran and seeing oil go past 100. Okay, we didn't go into a bear market then. Do we think that we're going to go into a bear market now? I mean, it's more likely that we get a deal with Iran than the alternative at this point. The question is, when does that happen? So I don't know. I'm personally not worried at all. I think that this is a good opportunity, and it can definitely get worse. But you know what? If we're looking 6 to 12 months out, it can certainly get better.
Yeah, Tanner brought up something great in his stream earlier, and it was around specifically Google Cloud revenue and how it is accelerated close to, I think, like 30 odd percent over 60% year over year. And the comparable quarter was around 12 billion. Now it's around 20 billion and probably going to continue to grow at that rate. And also margins have never been better than what we're seeing right now from Google Cloud. So just cautiously optimistic that we will continue to see that, not just in Google, but other hyperscalers as well. So, the fact that people want to sell here, I don't think it's that bad. I think people need to recognize that markets always need a breather. I think that this was just a scapegoat for a reason to take some money off the table and reset. Maybe some of it's associated with SpaceX, but I doubt it. I think it's more along the lines of people just posturing for what's going to transpire for the rest of the year. But I think there's still so much to occur, right? We still need to get oil below $80 a barrel. We still need to see inflation reports, in the next week or two. So there's a lot to potentially, I guess, tackle before we really close the books. And I think that it's just really people starting to recognize that, hey, like within the next 25 days, we're going to be in the second half of the year, and things aren't looking as promising as they once were for rate cuts. So unless you kind of mandate it for going against the data, and you mandate it just so that the U.S. can get out of their debt issue, then I think that it doesn't really make sense right now to cut rates, unfortunately, as much as I would love for that to happen, because it would be beneficial for me as well.
Yeah, we'll see. I think, look, we're definitely on different sizes. I just have this long-term opinion that rates need to stay at 2.5% and only be moved if we absolutely need them to. But let's move on. Are you buying SpaceX?
Yes, but as a hobby, not in reality, like not anticipating to make money. I mean, I think I put in for 10 shares or something like that. And as we kind of, I guess people probably know, like 10 shares, $135 a share really isn't going to break the bank. It's more along the lines of just at least keeping some skin in the game. I could see a world where this does actually run to 2.5-3 trillion in the short term. There's likely a lot of people that want to get involved in it, as well as a lot of institutions that have to get in it because of its size. And I wouldn't be surprised if once we get 5-6 weeks in, after some of the shares and the float starts to kind of come available and people are able to start to sell off, that's when we kind of see a peak over. But I'm cautiously optimistic in the short term. It'll likely be a I don't want to say a short squeeze. That's not the right term. A rush for the available shares that are outstanding, and it won't be until 5-6 weeks in before it curls over.
So I want to talk about Meta. I'm probably not buying SpaceX shares, although the shadow government probably is. So I guess technically I am. Did you see Jamie Dimon's interview with Elon by any chance?
No.
You're going to want to watch it. All right. Meta Platforms, everybody. Meta stock sinks on report. Company could raise tens of billions of dollars to fund the AI push. All right. So here is what we know. Financial Times reported they could potentially raise tens of billions in a stock offering to fund its AI investments. And it is pondering the potential stock sale after Alphabet increased its equity offering from 80 to 85 billion. Meta, according to the Financial Times, has not hired banks and may not issue new stock. A Meta spokesperson called the report pure speculation. And this was the quote that they got. Quote, we've been clear that huge opportunities lay ahead in AI and will continue focusing on raising capital in the most flexible ways to support that, the spokesperson said in an email. In April, Meta raised its 2026 CapEx guidance to as high as 145 billion. Now, we knew that this was going to happen. We knew that there was a situation where Microsoft, Amazon, and Meta may follow Alphabet down the road. And you know what? I don't necessarily hate it. President Trump is going to participate in a roundtable. I'm not watching that. We are going to be looking for the S&P a little bit later. I think it's around 5 o'clock, everybody. But look, nothing changed with Meta's cash flows. Nothing changed with its revenue. Nothing changed with its guidance. I mean, they just did 33% year-over-year increase in revenue in Q1. This is one of the best companies in the market, and a speculative report of something that they may or may not do does not change these numbers or these margins. It does not change people utilizing its product, and it doesn't change that they are about to diversify their revenue stream from pure advertising to go into a subscription model with agents.
What was the increase in net income for Meta over the operating income? What is it, like mark to market, or was it like a tax rebate, or
could have been something with I'm off the top of my head, I don't know. It could have been something with tax related. I'm not 100% sure.
Okay.
But when you look at this, I'm not seeing something I'm worried about by any means. This is a company that is one of the biggest cash generators in the market. And look, I would rather, oh, look at that. Ray misses you.
That makes somebody,
you know,
in the Houston metro area.
I think you should go hang out with Michelle and Ray. If I lived as close as you, I would.
I tried the other week, and they broke my heart.
What do you mean?
I don't know, but I can't tonight, unfortunately.
All right.
I have other obligations. Probably will.
Oh, other obligations.
Steven, don't do this.
I'm just saying. What we got going on?
I gotta go drive around.
It just got a little better looking up in here.
Speaking of good looks, that's what I'm gonna go do. I'm gonna go think about Irwin the whole time.
There you go. You go. But no, in all seriousness, everybody, this is when we have to really call a spade and say, okay, I know this sucks, but what businesses do we own? I know for me, the biggest positions I have, nothing changed from yesterday. The market can be irrational. We all know that. And I think it's really important for people not to get stressed out unless you're being speculative. Look, I don't tell you guys what you should do or what you shouldn't do. I will get to this in a moment. Thank you so much. Really appreciate it. Let me finish this thought and I will get to this because it's going to tie into the second part you said. You guys think this is a liquidity event, liquidating crazy margin people have been on? Look, I do think that there's people on margin. And it was part of what I was going to say is that if you're not buying on margin and you're not paying interest on a loan to purchase stock, what does it matter? Now, I do think that there is a world where several things happened. People started raising capital for SpaceX, because liquidity has to come from somewhere. There's over 8 trillion on the sidelines in money market accounts. And guess what? If that didn't come in for one of the biggest bull markets we've seen, that's not coming in for SpaceX. Selling off can get over exaggerated because of algos, high frequency trading, and stop losses being hit on traders. That can also cause margins and position calls. When that happens, things go down further. We could be seeing that today. And guess what? We could see it again on Monday. We could see it again on Tuesday. We don't know. But that is very possible. And it's happened before to us. So I sleep just fine. I sleep like a baby, knowing that I own great companies, huge assets, huge cash flows. I mean, did anything change with Realty Income, with their portfolio of assets, or a 98.9% occupancy ratio, or paying a dividend that's over 5%? No, not at all.
I bought more BM&R today.
Did you?
Yeah, I'm not a shook baby like everyone else in the chat who's probably like, I need to sell it. Or Tevis sold because he's shook baby.
Did he exit the whole position?
I don't know if he exited the whole position, but he exited some of it for sure.
Gotcha. Well, I'm still in it. I have not exited. I am not looking to exit. If anything, I'll buy more. If anything, I'll buy more. But that's not what I want to buy right now. Tevis trim 40%. Okay.
40%.
It is what it is.
Shook baby.
Look, a lot of people are probably freaking out over Bitcoin too. It is what it is.
Yeah, I think it's a good opportunity. I mean, I'm investing in crypto in a different way. I can't disclose that right now, but in a couple months maybe we can. And that was always the plan for me. I think if anybody goes back and listens to my streams, my thought process was always to wait for crypto winter, and dive deeper and pick up more. And so I'm doing so in a way, shape, or form. So I don't know if it means I'm gonna expand massively on, say, Bitcoin or Ethereum per se, but in the total infrastructure piece, likely.
I'm not a Bitcoin guy. I'm just not. But
it's going to zero, Steve.
I don't think it's going to zero. But it is what it is. I think that there's opportunities. And when we look at where things are right now, have a shopping list. I have a shopping list. Same way you make when you go to the grocery store. I got a shopping list of stocks I want to buy. Now, full disclosure, I am still in Reddit. Full disclosure, I rolled my calls. I had 167.50s for this week. I'd rolled them out to the end of next week at 172.50. I am now doing pretty well on it. We are up. And to come full circle, Chris, I think this is a liquidity event because I don't think anything's really changed. That's just my own personal opinion. Matt, what do you think?
You think it was strictly a liquidity event for people in margin, or what do you mean? Just people getting...
So when I say liquidity, I guess let me clarify. I mean, I think it's a liquidity event to raise capital, and I think people got margin called at the same time.
There have been a lot of new people entering the market that think that no matter what, markets only go up. So I think what ended up happening was likely people getting a little bit terrified of things kind of rolling over a bit. So I could see where that could be the case.
Yeah, I mean, look, markets do not always go up. Markets can go down, and investing is not supposed to be easy. It just isn't. Investing's not supposed to be easy. This is not supposed to be a job for everybody. This is not supposed to be you make a ton of money every week. Markets go down. We've had lost decades before. Just because a lot of people, including myself, think we're in 1994 doesn't mean we're not going to have a couple of bad weeks. Let's see where we are at the end of the year. The reality is we're still near all-time highs. There's nothing to freak out about. Now, Steve, what would happen if Tom Lee were to leave BM&R? I actually don't think it matters. Personally, the whole thesis with BM&R is that, at least my thesis, is I'm bullish on Ethereum. I do not know what's going to do better. I own Ethereum. I own BM&R. And the difference between the two is BM&R has the ability to stake its ETH through traditional and through DeFi, which can generate additional yield. They can then take that capital and make investments just like they did into Beast Enterprises, which could become a huge company. So I want exposure on both sides. I don't know that Tom Lee leaving matters. What matters is, are you bullish ETH or not? Because if you're not bullish ETH, you should not be in BM&R. I mean, BM&R is a play on ETH. Matt, how do you feel about what I said?
I mean, I would be a little fearful of Tom Lee leaving BM&R. Yes, I do agree that it's likely more dependent upon Ethereum in the face of Ethereum, but I think that as chairman, that's always a concern for any company is, how does the head of the board look? How's the CEO? How's the directorship look within the organization? So if you were to ask me, Tom Lee is leaving, would that scare me? Yeah. So I would definitely have to think about, do I still agree with the direction in which the company is heading? So hopefully that answers the question. Just like if Michael Saylor were to leave as chairman of MicroStrategy, or if Jeff Bezos were to leave as chairman of Amazon, or Sir Peter Beck were to leave as the head of the board at Rocket Lab, to me, it's a very important piece. That one not only is in terms of company focus and where the board is kind of directing things, but you also have to think on remuneration as well. Like, I think that there's a lot of, how do I say this now? Bad cultures that are festering within American businesses that you could claim as almost bureaucracies or aristocracies, as well as European companies. And that's where you start to have these classes of management that are just there to be able to ride business class, fly business class, get limousines, chauffeurs, and fly around the world feeling and looking important without actually doing anything, because they're resting on the shoulders of giants that came before them, being the founders or things like that. So that's something to definitely look after, right? And understand as that transition comes, right? It's one of the fears that I have for Palantir. It's one of the fears that I have for Rocket Lab. Do you have the capability and talent within the organization to keep the vision of the founder, or as the business matures, innovate beyond what the initial intent of the business was? So anyway, long answer for specifically BM&R, but yes, that is a concern.
So Matt, you're bullish Bitcoin, or you believe in Bitcoin to some degree. How do you feel about Saylor / MicroStrategy selling off some Bitcoin?
I mean, they have a lot of, they've been consistently buying, right? This is the first time that they've ever trimmed any of it since 2022, but their obligations and their capital needs are much greater than they were in 2022. They floated several preferred entities that require dividend payments, and so they trimmed $2.5 million worth of Bitcoin to be able to help pay for some of those dividend payments. It was then 0.004% of their total Bitcoin holdings, Do I think that this is a reason for everyone to short Bitcoin? Absolutely not. I think that if you are seeing Saylor trim 0.004% of the Bitcoin holdings that MicroStrategy has, and if you even just decouple the fact that it was for dividend payments and some of their preferred equities, and that drives fear into you, then you're a shook baby.
Okay.
Thank you for the blessings. I do need.
Matt, I am a SYM shareholder. Can you share your thesis on it? I know you were stacking. Also, your Rocket Lab comment asked me up almost 1,000%. Thank you.
I'm glad I asked you up. But Symbiotic, I mean, hopefully you have a thesis on it, because you're also a shareholder. But I believe that warehouses in general are premier real estate in the world right now, as everything continues to merge towards e-commerce and people are looking at more centralized warehousing, etc., rather than specifically storefronts. Brick and mortar is kind of where margins go to die, and so having a centralized warehouse and being able to ship direct to consumer is kind of the pathway right now. But even still, if you think about how inefficient warehouses are with people, as well as having the forklifts are great, right? They're very useful, but you need a lot of space in order to operate them. If you have fully optimized robotics that can take away a lot of that, then you can have way more room for actual product, and you can stack the products higher because hopefully you have it set up so that you can have it all done that way. So I think the Symbiotic use cases see anywhere between a 30 to 40% increase in total amount of product being stored in a single warehouse. So that obviously leads to a lot of benefits associated with utilizing their technology. So what the thesis is for me is it's a couple fold, right? They have a joint venture with SoftBank. Generally, SoftBank knows how to make money. Generally, not all the time. In the case of like WeWork, but most of the time, SoftBank knows what they're doing. So I have a joint venture there. They also will basically set up these warehouses for a fee, and then they make a margin on that. And then secondly, after that, the fact that they have consistent updates and high margin kind of warehouse as a service at this point, reoccurring revenue streams that's likely high margin. So to me, it's about getting the infrastructure built out, and I think that a lot of people invest in Amazon because of that. Well, why wouldn't you invest in a separate company that isn't Amazon that does that for other companies? So Walmart's been their biggest customer in this respect. So that's a positive and negative if you look at it. And the reason it's a positive is because they're the largest one of the largest commerce in the United States. And if you kind of remove AWS, they're still the largest commerce in the United States, including AWS. Amazon obviously is the largest in terms of revenue. But then you think, so if they're able to expand and take over all the warehouses for say Walmart, it's a huge opportunity set. Two, if they lose Walmart, that's obviously a very large negative. So Walmart can be a double-edged sword there, but so far it seems like it's going in the right direction. Then you have Medline, which is one of the largest medical distributors in terms of medical equipment worldwide, at least in the United States, and they have been getting into that market as well. So it seems to be that they are achieving some pretty good gains with both. So if a lot of people were bullish on what Amazon's doing with robotics, why wouldn't they be bullish on the same thing, but a separate company that's not at all related to Amazon? So that's kind of my thought process with that. Warehouses aren't going away. E-commerce isn't going away. So if you have a company that can, as a service, get your warehouses in shape, that's something I would want to be involved in.
Yeah, I'm not in it. I don't have many thoughts on it. I'm playing the robotics through Amazon. That is my play on robotics. Let's see where we are. Matt, are you good with Polymarket?
What does that mean?
Can you find what stocks are on the table for getting in to the S&P today?
Oh no, I'm not good with Polymarket in that respect.
I was trying to find it. I couldn't. Here we go. Extended hours, everybody. Extended hours. Looks like we're settling at least a little bit in energy. Who's the big losers? Nebius down to 220 after hours. Marvell 258, Rocket Lab 108, Zeta under 22, Reddit 170, Cloudflare 246, IBM 280, CoreWeave under 100, Qualcomm 212, Snowflake 235, Micron continuing to go a little lower, 852, Fortinet 143, Hood 8159, Palantir 134, Adobe 249, SoFi 1592, Service Meow 111.72, Meta 589, Oracle 212, Microsoft 414, AMD 464. Look, AMD's down like $70 or so. It's okay. It's up a ton this year. It's up a ton. It's up a ton. I don't think that you guys got to worry. I think it's going to be all right. I don't think that we need to really get crazy about this. I think it'll be all right. Let's see. Give me one sec. Oh, here we go. Let's see what they're saying about SpaceX. I may buy it, Matt. I'm just kidding.
Being banned from participating in future IPOs. Now, for SoFi and Robinhood, it's 30 days. So it's not necessarily a restriction, but a penalty. You can still sell if you want, but you could potentially be blocked from accessing other IPOs in the offwings like Anthropic and OpenAI as the market waits for those. Question is, does this policy actually help instill more stability in SpaceX trading after it goes public next Friday, or does it put some smaller everyday investors at a disadvantage? Fidelity also reducing the minimum amount of money required in an account to participate in the SpaceX deal from $100,000 to $2,000, so that IPO eligibility at the same time is going down.
It shows how these firms, they obviously have two sides of this trade to please, right? You do want to attract or serve your customers by saying, let's make it easier for you to get a piece of an IPO. It's a rare opportunity. On the other hand, the underwriters, they want to place it in relatively secure hands. This is always the case, by the way.
Sure.
Underwriters, they'll go to institutional investors too, and they want to get them to commit to not flip the stock. The thing is, whoever doesn't get an allocation in the retail brokerages, maybe they want to buy it. They need to buy it from somebody, right? You actually have to have some people flipping it.
Right. That makes sense. For every buy order, there needs to be a sell order. I think it may perhaps also suggest that for any investor, depending on your allocation or how much exposure you want to have to this one specific name, there needs to be an investment strategy you develop for not just the first day, but for the course of the month or two. We've been studying the performance of other high-profile IPOs over the last 10 years. Those that see that big one-day pop, on average, they tend to underperform 3 to 6 months later. Of course, there are exceptions.
No, that's a really good point. And I guess what it does is for a client of one of these firms, if you want to buy it, make sure you want to own it for a month. I mean, that doesn't seem like a very high hurdle if you're buying a stock, but interesting how it's going to play out. Yeah, Seema, thank you. All right, ahead, Bitcoin hitting the lowest level since October 2024 today, trading below $60,000 as a number of factors collide to weigh on the industry. We'll dig into the move next. Plus, big moves lower for some of this year's biggest gainers. The memory stocks falling more than 8%. The semi ETF posting its.
I mean, I gotta tell you, I think Bitcoin coming back over 61,000 is important. If there was going to be a huge sell-off, I think it would have went significantly under 60 when it broke. What do you think?
I think everyone's being shook babies. I mean, look, I'm not. My thesis hasn't really changed much. I think that I thought it could dip below 60, but it wouldn't be a long time. I think the range is 65 to 80, and you'll have some spurts above it or below it, but I don't know. I'm cautiously optimistic on that, and I'm not reverting at the moment. I haven't seen anything that would make me feel uncomfortable with my previous predictions.
Okay. I don't hate that.
Steve is a shook baby.
You know what? Sometimes I get a little scared. Sometimes.
You end up buying those SoFi leaps there, Steven?
No, I'm waiting until Monday. I want to see if we get a continuation in the sell-off.
Oh yeah, but that is a pretty good V. So I see what you're saying. So yeah, over the past 2 or 3 hours.
Yeah, look, it looks like Bitcoin is bottoming. Looks like it's ticking up a bit. Look, I think that it's gonna. Let's run. What poll would you like run? I'm happy to run a poll for everybody. What would you like the poll to be? Let me know. If Bitcoin
Steve did sell his Micron. I still have my leaps, unfortunately.
Yes, I exited Micron. I went into Broadcom. Micron for Broadcom.
Luckily for my, I don't hate that either. By the way, I like Broadcom a lot, and I was pretty disappointed that they came down so much. But, so yeah, I don't think that that's a bad move. But yeah, I mean my Micron, at least my leaps were somewhat shielded because they were. What did I do? I forget what exactly contracts I bought. I think they were for July, but I sold either next week or 2 weeks out, short calls. So with that, fingers crossed that I'm able to at least claw back some of it. And I feel like next week, I don't see anything that's going to cause this to persist into next week. Personally, but I wasn't expecting a 5% overall down day today. So,
I mean, it's hard to expect a 5% down day any day. Like nobody wakes up and thinks it's gonna be down 5% unless something happened. Nothing happened. Nothing happened. I mean, you got a good job report. I don't think that that's the end all be all with where they're going now. People are really freaking out because Coinbase is at 152 and MicroStrategy is at 120. I mean, let's see. Hold on.
Have to have some theory of the case as to what's going on to decide if the selling has worked its way through. So what do you think are the key factors causing the weakness?
Yeah, Mike, thanks for having me on. So it's been a really tough 8 months to be a crypto investor, as you were just pointing out. Bitcoin's down big this week, but 50% from all-time highs seen last year in October. But what's been driving price action is really a combination of cyclical headwinds and some of the geopolitical risk that is rising. So trading volumes remain depressed in May. Retail continues to sell into weakness. There's no dip buying. And we've seen significant Bitcoin ETF net outflows over the last month and even over the last week. But again, in addition to those cyclical headwinds, you have rising geopolitical tensions in the Middle East, and you also have now concerns of rising rates. So I know everybody likes to refer to Bitcoin as a digital gold or store of value, but Bitcoin actually trades as a high beta risk asset. It's exposed to many of the same risk tech stocks and equities more broadly. But Mike, one more point that I'd point out is that we've seen this story before, right? So Bitcoin underperformed NASDAQ by 70% in 2018. It proceeded to outperform by several 100% over the next 3 years. Same thing in 2022. Bitcoin underperformed, but it outperformed in 2023 and
Right.
2024 by 100%.
Yes, there's no doubt about that. I do wonder, though, if this latest bout of weakness also comes as, the crypto market got everything it wanted, right? I mean, a friendly administration, got a lot of loosening of rules. It got into all these different ETFs and retirement funds and everything. And I wonder if there was no more positive catalyst to come along to carry it. Other high beta risk assets have been flying, and Bitcoin hasn't. You had strategy selling. So I wonder if there's a longer term crisis of faith happening with the story.
Yeah, and that is a good point. The big difference between this correction and prior corrections is that during this correction, you've actually seen Bitcoin selling off while the broader market has rallied. That's different than the past two corrections. We are still awaiting the Clarity market structure bill. But to your point, I think that you've seen client focus really shift from Bitcoin to revenue-generating tokens that are powering blockchain operating systems in applications. So the best example there is going to be Hyperliquid, a decentralized exchange generated $850 million in transaction fees from trading. It uses 97% to buy back and burn or remove from circulation the Hype token. So token holders really have a claim on cash flow. The other place that investor focus is shifting is to the blockchain natives, Circle,
Right.
Coinbase, Figure Bullish, as well as the implications of tokenization across traditional sectors, banks, exchanges, asset managers, fintechs, and payments.
Yeah, I guess it continues to evolve as it grows. Andrew, going to have to leave it there, but really appreciate you coming on today and breaking it
Thanks
down
for
for us.
having me.
Andrew Moss.
Yeah, I don't think Bitcoin's in trouble. I think it's going to be fine. I think sellers selling 32 Bitcoin is not that big of a deal. Definitely perception. It sucks a little bit, but ultimately, I think the Bitcoin community is too strong. Matt, Apple, WWDC, the Worldwide Developer Conference kicks off next week. Is Apple the smartest kids in the room when it comes to big tech with not spending and just licensing out to Gemini? Because they are expecting big Siri announcements. Have you thought about this at all with Apple and what it means?
Well, I'm glad to hear that they're improving Siri, because it's always been a thorn in my side personally that I can rely on and have conversations with Grok or Gemini and get a lot more out of it than having conversations with Siri. So the thought process that I'm kind of looking at with respect to Apple, they'll get some tailwinds associated with these other folks being able to create, right? Whether it's people creating new applications through vibe coding, and that eventually flows through their mobile apps, the App Store, and they get the 30% revenue cut from that, or if it's people continuing to use. So the ecosystem with Apple continues to be one of the main key things that keeps it afloat. But I don't know. I think that they need to truly participate in this. Otherwise, I think eventually they're going to be left behind. Yes, I think they've seen an improvement in services revenue, which has led to a decent actual growth in bottom line, which has, I guess a year ago wasn't even the case. They were actually starting to lose net income year over year, it looked like, and you can correct me if I'm wrong, your numbers are better than mine, but now they're actually starting to see some net income growth. It wasn't just through EPS, right? Which 12 months ago, I think was a completely different case. The only reason why they were increasing EPS was because of the massive amounts of buybacks that they were doing. So, I mean, it's not, how do I say this? Like, smartest guys in the room? No. I think what they're trying to do, which I think is an Apple strength, is they're really trying to understand what path goes forward before they make a lot of their moves. they're generally very fast followers, and when they do put their mind to something, they do it extremely well. So maybe they are the smartest in the room because they have the cash on hand to be able to potentially make a big movement in a space. Or maybe, to be honest, maybe they do what Google just did with SpaceX, and if they need additional growth or usage with Siri or something like that, then they can just license it out through one of the neo clouds, just like Google just did with XAI. I assume it's through XAI, but I guess technically it's called SpaceX. But that massive deal that they just went through to get very quick chips in the usage of those. So I don't know. I don't know what other products are going to come out with. But I think that regardless, they're going to be a beneficiary. That's all I got to say, I guess, about that.
Yeah, when it comes to Apple, I think that they may be doing a very smart thing. Look, they didn't have a need to spend on CapEx. They do not have an AWS. They do not have an Azure. They do not have a Google Cloud. Now, Siri is a different story. But with the amount that everybody is deploying in the CapEx, was it beneficial for Apple to deploy that level of capital or wait until others build out their models to improve Siri? Now, because they're not running an enterprise-grade business off of their data centers, I think that they did the right move. Focus on buybacks, increase shareholder value, let everybody else spend to figure it out, and then they can license Gemini and embed it into their products and make Siri better. On that aspect, I think that they were very smart. I think they did the right thing. I don't think that they had the reason to. I mean, let's be serious. All that they do, the biggest thing that they do is storage with cloud. They're not running an AWS. So deploying 50 to 100 billion a year probably didn't make sense, because should they even get into that game? I don't think that they should. They're too far behind. Now, if they wanted to, they probably could get in that game. Household name, people are going to trust Apple, but they don't have a segue of products. I think they're too far behind, so it's probably smart. I'm bullish on what comes out, and I think Siri can be significantly better off of the Gemini model. Let Google figure it out and make a deal with them. I just think the capital for them is better off in shareholder pockets through buybacks.
Lambo soon.
I mean, I don't know about that living in New York. I don't think a Lambo soon living in New York is the way to go.
Steve, when's the next basis points coming out?
You know, I'm not sure. That's up to Amit.
Because I'm about to go to the gym and I need it.
All right. Well, I'll put a request in for you.
So, like, right now? Or
We'll figure it out.
because last week it was at 5 p.m. and
We'll
that wasn't a hit. I'm genuinely, because like it really helps when I'm at the gym and I can listen. So
All right. Amit is doing Amit things out with the Palantirians, okay? Doing Amit things with the Palantirians.
So Steve's being shook. He didn't buy any SoFi spreads. I did. Let me think. I did buy back some of my Rocket Lab covered calls. So I'm waiting for it to potentially go to the opposite direction. I think I was up like a good majority on some of those in terms of percentage. So some of them I'm still underwater for sure in terms of like, obviously I had to buy back at a loss. But my thought process is in the short term, could Rocket Lab go to 100? Probably, but I don't think it's going to go much further down, especially with the momentum that's going on with SpaceX at the moment. So if this was the beginning of July or August or something like that, I think it might be a different story. But I think with the momentum and space still kind of being there, it just doesn't make sense for me to want to pull the gas off. But what else was I going to say? Yeah, I mean, I don't think this is going to be an elongated thing. I think the market is still very healthy. Surprised that Broadcom reacted the way it did this week. If I had more dry powder, I would add a lot more. Let me think. What else is there, Steve? Moved more money to Robinhood. Hopefully that goes through this time. What else? Private transaction this week. Can't talk about it, but once it clears, I'm sure we'll talk about it. Am I missing anything, Steve?
Listen, that's up to you, baby. It's up to you.
Oh, yeah, I am missing something. But yeah, that is up to me. Big Steve, you man. Trying to think. I'm not sure if I'm going to hang around for the rebalancing. That generally, that's at 5:15 generally.
You know what? There's some people in the chat saying that it's next week. Everything I'm seeing is saying that it is tonight because it is usually the first Friday. So I'm checking Gemini now. I checked Claude and I checked on the web. It's supposed to be tonight. So we're going to see.
Steve, we're going to take a little break from the market right now. Are you ready?
If you want to, I wanted to play something real quick.
1 or 2 minutes. Can it wait 1 or 2 minutes?
Sure.
Okay. I haven't gone to an Italian place in a long time. I'm going Italian tonight. We're obviously getting meatballs.
Right.
We're getting fried calamari.
Right.
They also do small individual pizza, so I'll probably get one of those for the table.
Right. Is
Where
it
do I go
family style restaurant or individual ordering?
It's individual, but I want to try some things because this is it's actually not far away.
You want the pro move?
What's that?
You want the pro move?
Yeah, what's the pro move, Steve?
All right, here's your appetizers. Your meatballs, but they got to be thirds. They got to be pork, beef, and veal. If they're not thirds, I don't want to hear it. Okay?
I'll have to check.
Because that's the ultimate meatball. A third pork, a third beef, and a third veal.
It is the best. You're not
All
wrong.
right. Then your fried calamari's got to come.
Yeah.
You got to get the 5-year-old food. You got to get the mozzarella sticks.
Oof.
You got to get the mozzarella sticks, and you also got to get fresh mozzarella with tomatoes.
Ooh.
Okay.
And some olive oil, Steve.
Some olive oil. You got to get it. Then
some vinaigrette.
I'm a big fan of the Holy Trinity. Okay. Chicken parm, veal parm, and eggplant parm.
People don't give eggplant parm enough credit, Steve.
Just saying.
Obviously I can't eat all that. So, I mean, I was going to go just because it's me and one other person. I was going to go meatball, calamari, and of course they have to agree to it, but I'm probably going to force their hand. Meatball, calamari, a pizza to nibble on.
You gotta get a full pizza. You gotta get one.
Yeah, and they're not. I don't think they're big boys. I think they're individual boys. And then I was trying to decide on the meal. I saw chicken parm, and that's kind of immediately where I was headed to. I don't know if I'm gonna do pasta because that might be too much with everything.
Unless you're going somewhere that's really known for the pasta, it's overrated. Get the other stuff.
Yeah, I'll ask him when I'm there. But I'm thinking chicken parm because it's been a minute, Steve, since I've got some
chicken parm's legit.
Actually, I think the last time I got chicken parm was with you, Steve.
I mean, I may have to get one
Which,
for that.
you know, it's 4 months. That's a lengthy amount of time.
I mean, I may need one.
Steve,
need one.
if you went 4 months without a chicken parm, you'd probably be jonesing for a
Yeah, it
chicken.
doesn't happen.
You're like, I don't even need to think about it because anyway,
I know it's not.
I didn't
part
mean
of
to derail it, but like I've been
No.
thinking about that, and I need to back to the market, Steve.
All right. So somebody who's more bullish than me, okay, came out today and said something very important. And I don't even know what he said.
Is Yardeni research president at Yardeni. Can I set this up a little bit?
Sure, absolutely.
I know viewers just want to hear from you, but you guys had a note back in the fall that really captured my attention.
Mhm.
And it was about the Mag 7 turning on each other.
Right.
And I can't help but think as this plays out that that is still kind of the case, but I'm curious for your thoughts.
I think that's part of it. There's a lot of moving parts here in this story, obviously. I think there's a lot of trepidation about where AI is going and how much we're spending on it. But look, I think the issue here is we're back to the old economy issue about what the Fed's going to do. That's really what's hitting the market. And I gave people some warning. Actually, a couple of days ago, I wrote June soon. I thought that with the Fed likely to raise rates in July, which is still a contrary view, apparently, that would lead to some sort of pullback in the market.
Yeah.
And I think it's a healthy development. I would not want to have seen this market just keep going straight up.
Because you've said your year-end price target, if I'm not mistaken, is still where it is 8,000.
8,250.
8,250. But you said for the next little while,
Yeah.
things are looking too frothy for you.
They were too frothy. I mean, look, everybody thought that this market going up was FOMO, but FOMO would have been really more a valuation multiple going up. I call it FEMO, a fabulous earnings momentum. And so I don't really have a problem with an earnings-led melt up, but it was getting a little bit rich. And if it just kept going up on valuation, I think we would have a real problem. This is not, in my opinion, 1999, 2000 all over again.
And with all due respect to our amazing graphics there with the bear and the sounds, the Dow is still higher this week. The Dow is up 0.25% this week. I know pros don't look at the Dow. Markets are down a little bit and the win streak is over. But I want to put that all in context, Ed, because we are now in and have seen one of the greatest stock market rallies / comebacks in your illustrious career time. Have we not?
Yeah, absolutely. But it kind of was this year similar to last year. We had a panic attack in the market over tariffs. This time around, we had another panic attack over the war in the Middle East. The war is not over, but in both cases, those turn out to be great buying opportunities. And for all I know, this is going to turn out to be another great buying opportunity. I don't know that it's going to last.
Even this little thing, because I'm going to say something that 49% of our audience is probably going to hate me even more for, which is like, I hope the market sells off a little bit, because when the market goes up every day, Kelly, I don't know about you, maybe you can answer this. I get nervous. You want to see pullbacks. Pullbacks are healthy. Selling is healthy. A market that doesn't have a pullback or a sell-off, to me, is an irrational and often unhealthy market.
Absolutely.
Your take?
Well, I think the valuation multiple is high, but it's not high if you agree with me that the economy is resilient, as it has proven to be, and that it'll continue to grow over the rest of the decade. You know, I've been talking about the roaring 2020s, and a lot of people think that means we're 6 years into it. We're actually, if you use your fingers to count it, we're actually 7 years into it. So we got 3 more years after this one, and things are going really well. And I'm talking about 10,000 on the S&P 500 by the end of the decade. I didn't really want to get there by the end of the year or the end of the month. Some people are already talking about 9,000 by the end of this year, and I'm going to leave it at 8,000 and change.
So what do you make of this term, this earnings bubble term that's going around, which the problem with it is it again suggests it's either due to special factors or unsustainable.
Yeah.
Whereas what we're seeing now, does it give you, and this kind of maybe more relevant with things like the memory stocks, like the chip stocks, is this going to be an earnings bubble that we look back on, or are we building the foundation for?
I think AI is the real deal. I think what we're seeing here is just a continuation of the digital revolution, where we're able to process more and more data more quickly, more cheaply, and AI is a tremendous development along that road. It started with the IBM mainframes back in the 1960s, And now I kind of think of data as another factor of production. When we're taught economics, we're taught land, labor, and capital, and those are kind of short in supply. Whereas data, we're always going to have more and more. And the more we can process, the faster we can do it, the more cheaply we can do it. Guess what? There's going to be, it's kind of like, I call it my Buzz Lightyear theory, to infinity and beyond. There is no shortage of data. There never will be a shortage of data. And the reason these companies, and the well-managed companies, are spending so much on data centers is because they wish they already had them today, because the demand is definitely there.
So Matt, S&P 10,000 end of the decade. How do you feel about that? Because that's only 35.5% away from where we are today. That's not even 10% a year, considering there's half a year left now.
No, I mean I'm more on the line of 15,000 by 2034.
By 2034.
Yeah.
Why not 2035? How'd you come up with 2034?
2035 is for shook babies.
Oh, okay. All right. So
I said it, Steve.
35.5% over the next 3 years or 3.5 years. I got to tell you, I'm in their camp. Sell-offs are happy. You don't want it. He said 10,000 by the end of the decade. Did he not?
He might have.
Nobody can wait that long. What are you guys doing? You don't want 10,000 tomorrow.
This is why people are poor, Steve. Sorry to be that upfront.
You're just going to see a huge sell-off. You want to go up gradually, step up. You do not want it overnight. Craziness. Kalshi looking for group 10K by 2030. Oh, 2034. Okay.
I mean, this is the thing. Like, people want it to go up so much, so abruptly, that they're not fully comprehending. Like, the reason why I've been successful, and sorry to go on a little bit of a soapbox here.
No, do it.
But the reason why I've been so successful is because I've been investing for 150 plus months straight. Not because I invested one time and I put $1,000 in and it magically turned into millions of dollars. Like, that's not it. Like, you need to recognize that you need to operate and invest in your portfolio like a business would invest on a monthly or annual basis into their own company, right? Like, you need to act like you're a damn business. And so I'm tired of seeing these people like hoping that it goes up 100% overnight. It's just like, I'm not done buying. I'm not done buying Amazon. I'm not done buying, all these companies. Like, I'm actually pissed that some of these companies are running, because I know, and that's why I try to buy as much as I can when I can. And sometimes I don't care about the price, because I'm like, what's the difference between 245 and 250? Like Steve example earlier, sorry to put you, and hit you here, Steve. But you're like, it's not $1 for my spread, so I'm not going to buy it. I'm like, well, the market doesn't give a shit if you buy it at $1 or $1.05. If you honestly 100%. Think the stock is going to go to $30 a share, just buy it sometimes, and I see so many people try to, and then they end up missing out. So, I mean, I hate to use that as an example because I don't want to, be rude on your own show, but
no, it's a good example.
But a different example, you already have a lot, so it's easy for you to be a little bit more picky. But I see some people that are like, they don't have any, and they try to be super picky about entry prices and this and that. It's just like, dude, if you really think it's going to $100 a share, just buy the damn stock. So,
yeah, I mean, and I said that I am being very cheap right now. Right. There's no question about it. I'm being very cheap with it. I own a lot of SoFi, and I think that we could see it sell off on Monday. And if we do, Monday I'll buy the spreads. It's back in my wheelhouse for where I want it to be. And, I'm waiting, but I have a lot of SoFi. I'm not really missing out on anything. I added more SoFi 3 weeks ago. I increased my position by, I think, 9 or 11%. So not really worried about it. Look, I'm going to echo off of what Matt said. And I think it's a very big lesson. And I think a lot of people would do very well looking at the long term, not just at the short term, and really understand these are businesses, not pieces of paper. I think it's really important to understand that. And, when you get a sell off, there are things to buy. Matt was very elegant in what he said. He's not done buying Amazon. He's not done buying great companies. Has anything changed? Like, Amazon is probably the one at this point, that and Microsoft, that I'm adding to. Everything I'm seeing is saying S&P 500 rebalance today. So we'll see. But has anything changed in Amazon's ad business that they grew out of nowhere and did $17 billion in Q1? Did anything change in their e-commerce business? Did anything change in AWS? If anything, they got stronger because they're adding fleet services and they're opening it up to third parties. They're going to make a killing on that. So nothing changed. Did anything change on Microsoft? Did anything change on these companies? If anything, NVIDIA, Broadcom, and AMD are going to generate a lot more revenue next year because Alphabet just raised $85 billion, and there's a chance another 3 companies are going to raise more. Don't forget, we get Oracle next week, I think. Am I correct on that? Hold on. ORCL. We get Oracle on the 10th. Wednesday the 10th. We get Oracle. We're going to find out how much they spent. We're going to find out how much capital they're throwing into this and what we're doing. So, all right, let me take a look. Not seeing anything on the wire yet.
Steve, you're the man. That's all I got to say.
Are you seeing anything on the rebalance, Matt? Oh, hold on. 5:15. Hold on. We got something. Oh, boy. Big news, everybody. It's going to deserve a bell. Marvell Technology and FlexSet to join S&P 500. Marvell Technology, you get a bell, everybody. You get a bell from Marvell. Let's go. That was in my ear. No bueno.
Steve, I feel like that's bullish though. Obviously it's bullish for Marvell, but
super bullish.
That should be bullish for a lot of the market.
Chips, baby.
Yeah. So, I mean, I think everybody right now, Tanner just immediately throwing shit.
Tanner, you have a link. Get on here for 5 or 10 minutes, Tanner. Come on.
Tanner, you can take over for me, man, because I got to hit the gym before I got this obligation.
We want to talk to you for a few minutes. Get on here. We got Marvell getting in.
But I think that's extremely bullish for the rest of the market, because I feel like a lot of people were starting to think that the markets might be turning for the worse, another 20% down or something like that. But I don't know, that's pretty bullish to kind of see. You have this company that hasn't been involved for quite some time now getting its share, and that's going to add to a lot of Marvell being up 4.5% in the after hours now, offsetting, a little bit of the down move that was 15-16% today, almost 17 actually. But yeah,
Tanner will be here in 15 minutes. The way everybody did at the hotel, I was told I was not there. Everybody requested a speech from Tanner. We will request a speech about Marvell and how bullish this is for chips. Marvell getting in, Pool Corp deletion. The Campbell's Company deletion. And then Flex is getting in. Campbell's Soup is no longer part of the S&P 500. The S&P mid caps, Roku getting in, Core Mining getting in, Semtech, Centomia, Vive Solutions. I don't know what any of these companies are. Small caps. I don't know. How is Campbell's an S&P small cap 600 also? No sense. Cody getting in. Look at that. Blackboard getting in to the small cap 600. Lazard. Warby Parker getting in. Look at that. Nothing else really that interesting here. I mean, do you even know what any of these companies are?
I know Campbell Soup Company.
Yeah,
And
chicken
Marvel.
noodle, baby.
R.I.P. Campbell. So I agree with that.
R.I.P. Campbell's.
So you getting Tanner on here or what?
Yeah, he said 15 minutes. You can go.
15 minutes. Yeah,
Yeah,
I can't wait for that.
Yeah, you can go. Go get after it. You got things to do. You got important things to do. I'm
But
gonna hang out with everybody.
I'm gonna give you a bite by bite later tonight.
Listen, I want pictures. I want you to have an espresso or a cappuccino, your
Ooh.
choice.
Steve, another reason why I chose this restaurant.
Yeah.
They have a fucking cigar bar. Sorry, I dropped the F-bomb. But I'm like, is that Gemini playing tricks on me? Like immediately as soon as I walk in, I'm gonna be like, excuse me, ma'am, the hostess, where's the cigar bar? Where? And what do you got? And I don't care if the companion that's coming with me wants to enjoy the cigar bar or not. I'm doing it. So.
Oh boy. Laura
Ooh,
knows what's up.
Steven. I haven't had a good affogato ever. Well, I've never had one, I should say.
How have you never had one?
Steve, I'm an uncultured swine.
You know, Matt, this is not okay. Do you make coffee at home?
Sometimes.
Can you go get a pint of vanilla bean?
Yes.
There you go. There you go.
So he said the cigar bar will undo all the hard work in the gym. I think the food at the Italian place is going to be more detrimental than the cigar bar. But
Yeah, I'd worry about the Italian restaurant, not a good old, Opus X or something.
Steven, now we're talking.
Matt, go get it.
Steve, this Marvell, Steve. I'm sorry. Before I go, this is, I think,
Oh, hold on a sec.
Oh, we got
Desi's here. What's up, Desi?
What's up, mommy? Oh no, Desi Miami. That's what it is. I thought it said
What is
Desi
wrong
Mommy.
with you?
I'm sorry. I did not intentionally do that. I thought it said
just
Desi
said,
Mommy.
what's going on, Desi? What are you doing?
Steven. Man.
Oh, Matt. We apologize.
I'm sorry.
We apologize.
That was a genuine mistake. I think that this Marvell movement up 7% after hours is very bullish for the market on Monday.
Marvell getting into the S&P, super bullish. We did not need another tech company getting in, let alone another chip company. The fact that Marvell just got in, I mean, I'm sorry. Now you have to make t-shirts that say, "Hey, mommy" on it.
Hey man, you don't want to hear the things that I say
Oh my God.
to my Latina friends down here in Texas.
Oh my God. But no, in all seriousness, Marvell getting in is super bullish for the S&P. It is super bullish AI. It is super bullish tech. And I think it shows the market's not worried about tech having a larger weighting. And maybe this is what NVIDIA needs to scale. Maybe this is what NVIDIA needs for the market not to be afraid of it going past 10%. Maybe that's what it needs.
Steve, I'm getting absolutely destroyed in the chat right now.
I mean, I would leave if I was you.
Yeah, I love you guys. Thank you so much. I wish it wasn't raining, but it is. So, Steve, are you gonna be live later, or is this the last stream for the night?
Undecided.
I wouldn't be home anyway, regardless. I am a Torta chaser for sure.
Yeah, I think my schedule is going to be tonight taking off to get a few things done, and tomorrow night going to invite some people. We'll see who wants to hang out tomorrow night, and then I'm up for a stream tomorrow and Sunday during the day. We got members only on Sunday at 1. Matt and I will probably do our small port on Sunday. What's going on, Matt?
The chat is just completely going wild right now on me. Oh shit!
Yes.
What does he say to his Latino friends?
Listen, we don't want to know. Okay, that can be like a special video from Matt.
That's a members only.
Yeah, that's a members only from Matt. That's a members only. Erwin.
I'll tell Erwin on my drive over.
Erwin, I'm sure that you'll get a phone call or a text message. I don't think you have to worry, buddy.
You guys rock. All right. Thanks, Steve. Thank you for having me on, Steve. I gotta hit the road.
All right, you get after it.
You're the man. Later.
All right. Marvell is in, everybody. I think it's big news. I'm super excited. This rounds out, forget the market. Forget that we're down. Who gives a shit? Who gives a shit? I'll say it again. Here's where we were. We started the week out with Jensen's keynote. We started the week out with Alphabet. You guys are now trying to get me to laugh. We started the week out with Alphabet, diluting and the share price not really moving. Then we had the big ass event from Microsoft. And now we have Marvell getting into the S&P. If this is not bullish AI, I don't know what is. This is super bullish AI in my opinion, and that's my opinion only. I think markets going down is healthy. And you know what? There are some companies that are expensive, sure. There's also companies that are inexpensive because there are real market inefficiencies. And I will tell it to the market, I don't care. I don't care that we got a down day. I legitimately don't care. Like, I really don't. We got a down day. Oh, no. Oh, no. We got a down day. Like, it's okay. There are companies that are doing great in the market that are undervalued. Nothing changed. We have a speculative report about Meta that they're saying is purely speculation. Charles, say it again because I must have missed it. So it's not that I want to make you say it again. I'm asking you to say it again because I don't know what you said, buddy. I do not know what you said. Let's see where we are on the after hours right now. We'll look at Marvell's numbers. Yeah, we're going to do it. I'm bringing it up right now. Did I buy more CoreWeave today? No, I did not. Marvell running down a dream after hours. It's up 1680. It's okay. It is all right. I'm scared somebody hold me. I mean, you came to the wrong place, but I will comfort you and tell you it's going to be okay. Micron's up a little bit. AMD's up a little bit. Lena, you got to be happy that AMD turning the corner. I mean, yeah, it's still down, but we're still up. I mean, look, AMD's still up a lot this year. It's okay. Lena, maybe one day I will schedule it to have road rage so everybody can hear it again. NVIDIA, oh my God, 205. The sky is falling, the sky's not falling. Thunder, thank you so much. Really appreciate it. I really do appreciate it. Any periodic videos? Maybe we will. Maybe I'll do an update video a quarter. Maybe. So I need some help. Will you guys help me? I want to do more regular video content, but I don't really know what content you guys all want. Okay. I love breaking down companies. I was going to do a meta video this weekend. I want to know what areas you guys are interested in. That's what I want to know. For dedicated videos, what would you like? Doing a poll. Individual companies, dividend focused, ETF focus, educational / instructional. I can't spell. Spell check has made me stupid. So we got a lot of people here. If you guys could please let me know what you would like, I would really appreciate it. It'll help me figure out what I'm going to make. I want to do, oh boy, Erwin, I'll talk. Erwin, how about this, buddy? You ready? Every investment is the present value of all future cash flow that company will generate. How about that? Did that get you excited? Because that's what you're buying when you invest in a company. You are not buying a piece of paper. You are buying all of their future cash flow. If I could put in all of the above, I would. I could not add a fourth. All right, individual companies is the win right now. Educational instructional is rounding the corner. You guys don't want me live gambling, okay? I got a stack of sports cards that I gotta send out to get graded. All right, you don't want live gambling. Trust me. That's not what you want. All right. Individual companies it is. So here's the other thing. Do you like the videos where I make the PowerPoints? I'm not even going to spell check that. I know it's wrong. Yeah, I feel like the PowerPoints are nice to look at. I mean, shit, Nancy Pelosi needs to give me trading tutorials. Shit. You know what? I have a few Vic, I'm sorry, I can't do it. I can't do it. I don't it's not that I can't, I won't do it. I don't do small caps. Sorry. I just don't do small caps. Not me. It's not what I invest in. It's not what No, I'm not. Listen, I have no interest in roasting anybody or getting into beef with anybody. It's not my style. I don't care. I hope everybody does well. I have no interest in that. The only time I'm going to get into it is if somebody comes after me. Otherwise, it's, it is what it is. I am going to do a video on deep dives, absolutely. And yes, Beckett, it may have to be. It may have to be. I mean, look, the reality is PSA is closed for a long time, and I'm not looking to spend the extra money on it. That's unless it's something crazy like a Jordan rookie. No. Oh, for the farming community. Yes, I apologize. What did I buy for the farming community? Shit, hold on. I bought more Energy Transfer. That video's coming out. It's going to have to come out next week. I'm sorry. Let me log into the account. Boom, boom, boom. It was Energy Transfer and something else, but I don't remember what it is. Let me look at the transactions. Hold on. History. June 2nd. Where the hell? I guess I bought, okay. So here are the three companies I bought for the dividend farming series that I owe everybody a video on. I bought another share of Salesforce. I bought 5 shares of Energy Transfer. And I bought 1 share of Keurig Dr. Pepper because it was a gift from somebody in the community. So I do owe you guys that video, and I will get it to you. I absolutely will get it to you. And it looks like we had some dividends land also. Listen, guys and gals, here we go. Not my style. Here's the cold hard truth. If you made money and you have to pay taxes, you did well in life. That's the cold hard truth. If you want to learn about the tax code, go read the tax code, talk to Grok, Gemini, ChatGPT, or Claude, or go pay a very pricey accountant. I'm not that guy. Sorry. I'm not that guy. Sorry, guys. But listen, I hear you. It hurts, but I'd rather have to pay taxes than not have to pay taxes, because you know what? If you don't pay taxes, that means you didn't make any money. This is what I'll tell you. I have a very expensive accountant. That's what I'll tell you. And what I bought this week, I am now in Broadcom. I am out of Micron. I bought more QXO. I bought something else. Oh, I rolled the Reddit covered calls to next week for I rolled them out and up and got paid to do it. Okay. Got paid to do it. How often do I speak to who? My accountant? Well, considering my accountant's one of my best friends, I talk to him quite a bit. Do I do iced coffee? Yes, I do. I do iced coffee, absolutely. Look, I was on the Broadcom train for a while. I just didn't own it. But look, here's the big reality. Got a lot cheaper. Shit. Come on. I did the wrong one. I apologize. Oh, you know what? I want to do one more poll before we get into this. One more poll, if you don't mind. A lot of you have asked me for this software. I'm not putting it out because I'm not paying for a commercial license. Okay. I don't know how much. Ray, let's not make that a meme. All right. Let's not make that a meme. But in all seriousness, if I paid for a commercial license for the data, I'm going to put a feeler out. Let's put a feeler out. Would you pay a small fee for the software? All right, we'll put a feeler out. I've said I'm not putting this out too much, but you know what? You guys ask a lot, so we'll put a feeler out and say. All right, so here we go. The reason that I moved out of Micron is because Broadcom got too inexpensive for me to pass up on. It's got 115% EPS growth over the next 2 years. Oh, shit. You know what? I probably should say what the fee was, right? Under 10, let me redo it. Under $10. Yeah, I'm not looking to, honestly, I would just be looking to cover the API cost. $6, $7. I don't know. I haven't done the math. I'm just wondering. Would you pay? I don't know. I have no idea how much it's going to cost. I'm going to take a guess. $7.90. I don't know. $10. All right, new poll's up. So we'll see. Look, I'm $7.99 probably. I'm just putting 10 for easy numbers in my head. I don't want to really charge you guys anything, but I believe the commercial license is like if the commercial license is what I was paying for now, I would just make this a website for all of you. But the commercial license is expensive, I believe. So it is what it is. But Broadcom is trading at 15.6 times 2028 earnings. That is inexpensive, in my opinion, for a company that has 115% EPS growth over the next 2 years. I would be buying more NVIDIA, but I own a lot of it. Yeah, $7.99 is more. I just put $10 just because it's an easy number for me to do math on in my head. Okay. So, but yes, if I could charge nothing, I would. Like if I could charge nothing, I would. And look, let's look at the visualizer. I mean, what a great quarter. 48% year-over-year growth. Great margins. 67% gross profit, 49% operating income. Great freaking margins. Free cash flow, 98% margin. I mean, incredible. Absolutely incredible. A PEG ratio of 0.3. Jesus Christ. Tanner would love that. Tanner would absolutely love that. look, even though Nvidia's got better margins, I mean, Broadcom's margins don't suck. And when I look at it compared to AMD, it's like, a lot more profitability. Let's take Nvidia out. The ROE at 36% and ROIC at 19.5% is incredible. I mean, way more on a TTM basis profitability. Margins are better across the board. I mean, listen to this. 43% free cash flow margin, 44% cash from ops margin, 55% EBITDA margin. It's hard to be bearish on Broadcom. Huge amount of free cash flow. Now, I don't necessarily like these multiples. But for the amount of growth they have, now let's look at the forward earnings again with just these two. I mean, that's why even though AMD has more EPS growth, tell you, I really, really like this. I think Broadcom is going to do very well. All right, 50-50, all good. I'm going to send them an email. I'm going to look into how much a commercial license is. Let me see what I can do. All right, let me say. Yeah, 15 times 2028 is crazy low for Broadcom. Let me see what they're going to charge me. Let me see what they can do. If we put Coca-Cola and Pepsi, I mean, Broadcom is trading at a lower valuation than Coca-Cola. And I get it. Coca-Cola is more durable earnings. I get it, but Broadcom ain't stopping anytime soon, ladies and gentlemen. They are not stopping anytime soon. Rish Patel, I'm going to look into it. I'm going to figure it out. Listen, in all seriousness, I'm actually wouldn't even be looking to offset the whole cost. I'm not looking to make money on it. I'm just not looking to pay for the entire slate. So I'm gonna talk to them. I'm gonna see what the damage is gonna be, and let me get some costs and see if it's something that I can do. I don't. Maybe I can just do it on my own for the community. I don't know. Let me see. I'll see. How about Meta? I mean, I'd rather be buying Meta here than Pepsi. That's just me. I wonder if Captain Sleepy Time went to sleep. Did you fall asleep? I just texted him. Maybe Matt Money could sponsor me. Yeah, Carlos, I may do it. I may. We'll see. Listen, I don't know what they're going to charge me, so I'll find out. It is definitely a conversation that I can have with them. I think that I'll tell you what, I think that this Tanner's having dinner. Okay. No, Lena, I did not buy the dip on now. I did not. I'm actually waiting for Monday just to see if I think we're going to get a tweet from the big guy. We already know that he said that stocks should be going up, not down on that jobs report. So we'll see. So Redley, here's the problem. I'm not using a scraper. I'm paying, like I am personally paying for the data to come in. I'm not using a scraper. I built all this with Claude, but the data is not free. Like I would never put something out with scraped data. Can't do it. I mean, look at this. Can we really get mad at Meta? What really changed? What really changed? I mean, this is oh, you know what? Let's see where the dividend farming, for all the dividend farmers out there, where are we at? And this is not updated with the new moves. But even after today's dump, the ROI is still positive. That was the heat map heading into today. Redley, I'm getting old SEC data, man. Trust me, if you looking at what I'm paying for, I'm getting everything. All right. Well, this will be updated for next week's video, and I'm excited to see where this goes from here. We got the Knicks tonight. Yeah, there's going to be no stream tonight. I am going to be watching the Knicks. Celery, I mean, we did build a Temu terminal. And I got the Temu terminal going for Bloomberg. Got all the filings, news, technicals. I got everything here. I built a Temu terminal. Absolutely. What are the moves next week? I don't know. We got to see. Look, I want to see what happens on Monday. Look, I like tech. You guys know that. Amazon Meta, I'm not taking big swings. I think that they're going to do really well. Why do you guys keep talking about this company Keel? What the hell is Keel? Keel Infrastructure. All right, it's not a small company, 3.7 billion. How much revenue do they do? 218 million of revenue. I don't know if I can screw with this. It's too small. This is not where I really spend the time looking. It's a Bitcoin miner. I'm really not interested. Striper Kid, we're crying about the market going down. But you know what? We're not crying about Marvell. Marvell got into the S&P. Qubits, did you not see my article about Vertiv? I did an article on Vertiv on Seeking Alpha. Qualcomm is interesting. If Qualcomm falls a little bit, yeah, I think it's interesting. I'll bring it up. Hold on. VRT. VRT, Vertiv. You guys know I cover everything. Come on. I started covering Vertiv on January 2nd, and it's up 71%. Striper Kid, I salute you. That's amazing. So yeah, you can go read the article on Vertiv on Seeking Alpha, and I'm very bullish on it. I think it's going to do really well. Have I ever covered Medline? No, I have not. No, I have not. HYLN, no. Closed loop water systems. I don't know enough about them. And Enbridge is the holy trinity. It is the only one that owns pipes, utility companies, and renewables. I'm bullish Enbridge. I mean, energy and nat gas. I'm an infrastructure guy. I like Energy Transfer, Enterprise Pride Partners, Enbridge. I'm doing some due diligence on nuclear. I think nuclear is the future. Judge is out 4 to 6 weeks, maybe longer. Stress fracture on the rib. Enbridge is Canadian. So SMR is interesting. They're the only one to my knowledge that has that accreditation. They have a deal with Entra One. I gotta look more into it. But listen, I may take a flyer on something in the space, but I'm kind of looking at the ETF. We'll see. So this is actually going to be Tim Cook's last WWDC. Tim Cook's last, everybody. Man. End of an era. End of an era. Do I watch boxing? Not as much. I used to watch it a lot. I'm a Lomachenko fan. Not as much as MMA. What do you mean Tanner's live? He said he was coming on. What are you talking about? Tanner's not live. Why are you guys messing with me? I think Tanner fell asleep is what I think happened. I did not watch Ackman on the All In, but I'm bullish Mag 7 also, everybody. Like, I'm super bullish. Super bullish. And you know what? I do think that Meta getting sold off is a gift. Okay? I really do. What's my DCA into Broadcom? If it goes to 350, I buy more. And if it goes to 250, I buy more. I have no idea what it's going to do. I just know that it is going to, that I want it long term at this point at these prices. And that's the play for me. I'm not buying Bitcoin. That's not happening. I have no use for it. I bought a very little bit a while ago, but I really care less. BMNR and Ethereum, I'm in. I think stablecoins are legit. We'll see what happens. I think stablecoins are legit. Well, look, the stuff that I'm looking into is stuff I already own. And remember, everybody, don't let a day like today get you upset. All right? It is not worth it. This is just one day in a market that fluctuates. When we take a step back and we look at the SPY, we look at the long-term graph, it's going to be okay. This is a 1 year. We've lived through it before. We're up 24% a year. It's okay. It is okay. I don't think that getting mad that we're down 2.5% in a week. Remember, we're still up. After today's downfall, we're still up 1.9% a month. 1.9% a month. That's not bad. That's fine. This is fine. Am I bag holding BMNR? Yup. Do I care? Nope. Not at all. Don't give a shit. Don't give a shit. But listen, I want to buy. This is my own personal strategy, okay, everybody? Really listen to this. I want to buy great companies that are producing great cash flows, okay? The 4 companies that I am super excited about right now, it's nothing new. It's nothing new. But you know what? These companies are all doing over $100 billion of EBITDA. Over $100 billion of EBITDA. You know what else they're doing? They're all doing over $100 billion in cash from operations. So I want to buy companies that produce huge amounts of cash flow. Because when I buy a company, I am paying for all that future cash flow. Yes, this cash flow is being used to build out AI and data centers. But you know what it is also doing? It's also doing buybacks. You know what else I like? Hard assets. Check this out. Is it this one? It is this one. So I built this specifically for hard asset companies like pipelines. And I built it so I can have a heat map of everything. But you know what? Energy Transfer, in my opinion, just my opinion, 4.5 times EBITDA, 6.5 times operating cash, 17.5 times price to free cash flow. Now, Plains All American, very interesting also. Much smaller company. Great margins. But listen, I have a theory, and the theory is that the market will move and reward companies that own hard physical assets producing large amount of cash flow. So, I happen to like these companies, but I like big tech too. So it is what it is. It is what it is. But I don't think there's anything to worry about. I think that we're in a situation where I know we got Matt's take, and I really want Tanner to come on so I can get his take, but he's not even seeing this, so I think he fell asleep. I think that this was a lot of profit taking for SpaceX. I think algos got involved. I think that stop losses got involved. I think people got margin calls. This isn't something that I would worry about by any means. I would not worry about this. Let's see what Tom Lee had to say. So I have not seen this yet.
News, certainly in light of the Alphabet news earlier this week. Is this a good sign or a worrisome one?
Scott, I think Meta's move isn't surprising because Google had a lot of success raising $45 billion in a very short underwriting period. And I think it's a reminder that these AI companies are building basically, huge real estate infrastructures that aren't fully funded today. And that's why not only will SpaceX need to raise more money beyond its IPO, and OpenAI and Anthropic, and of course Meta and Google, but I do think they're showing a lot of promise in their investment today because there's been significant breakthroughs. So I think investors are going to give them grace, but you're right. I think Stephanie's right. This is not Meta's sort of financial profile is changing. It's changing from a free cash harvesting from their prior businesses to one where they're building land that could end up being beachfront property.
What's this sell-off about today, Tom? Is it did Broadcom spook the market? Did they start this? Is it positioning ahead of SpaceX and the biggest IPO we've ever seen? Is it something else? What do you think?
Scott, I think a lot of this, for instance, memory stocks are down, but they're back to where they were 8 days ago. I think the market did have a parabolic lift in the last month. And now I think there's some sobering taking place because expectations are higher. But I also think that SpaceX, $75 billion is a lot to ask the public to fund. So I think it is a big lift in terms of how you're going to fund that purchase. And so I think now when the stock's wobbled a little bit, I think people are raising cash. I don't think that this is the start of a broader correction yet, but as you know, we do think that later this year, there's going to be something that feels like a bear market. Today's not fun, though.
I disagree. I don't believe that we are headed toward a bear market. Not unless one of two things happens. Not unless we get unemployment going up. That's really the big thing. If unemployment goes up, I see us going into a bear market. But without that happening, it's going to be very hard. Unemployment is going to be the lifeblood. It's going to be the lifeblood. SanDisk is moving. Yeah. Oh, listen, if inflation goes to 5-6%, that's going to be a big damn problem. We need a deal in the next 2-3 weeks. Well, I think we can get rate cuts without unemployment going up. I'm in the camp that interest rates are too high. The carrying cost on debt is too high. A lot of people have mortgages that are very low because of where rates were previously. And you're not going to get the housing market on lock with rates where they are. Also, carrying costs on debt is bullshit. It is so expensive. So expensive. Also, listen, I am a number one fundamentalist of the job market. I don't care about inflation the way I do about American jobs. I would rather the Fed not tinker with rates And I would rather them focus on jobs and keep rates at 2.5%. And if inflation goes back and forth from 2.5% to 3%, so be it. But the reality is that making sure small and medium-sized businesses and large businesses can tap the equity markets and tap the debt markets to expand. That's the most important thing. We want to make sure there's a robust job market out there, because without that, we will enter a recession. Yeah, the deal keeps getting pushed out. We need a deal. Portable mortgages, I'm in favor of that. I'm definitely in favor of that. I am not in favor of 50-year mortgages. I am in favor of portable mortgages, though. I am. I really am. I want to watch one more thing with you guys. The more I think, and look, I'm going to contradict myself. I think no matter what, I'm becoming a shareholder, because I think the shadow government's going to buy SpaceX. But I'll tell you, listening to Jamie Dimon speak was really eye-turning. Now, I'm not saying I'm going to buy it, but I don't. So here's the thing. What does overheating actually mean? Because keep in mind, in a free market society, if demand goes through the roof and we get inflation because there's not enough supply, people will come in and build more supply because they can make money and it'll even out. I don't think that we have to worry about the economy overheating. I think making sure that we have enough jobs and businesses can actually conduct business is more important. I think that that is way more important. So we'll see. But I think that this is bullish SpaceX. I think they're going to show it.
Jamie Dimon interviewed surprise guest Elon Musk, who joined virtually. The conversation opened with a question about why SpaceX is going public now, to which Musk responded with an answer about 100,000 satellites in the future.
So they're not going to show it, but I do want to watch it. They're going to summarize it. It was on JP Morgan's site, so I don't think I can show it.
Of energy generation in space, but then he summed it all up in this exchange.
We're embarking on a massive new growth phase, and we need capital for that.
Okay, number two.
That's it. Another thing is the revenue. Like, I also feel pretty good about like the revenue projections. Like meaning like before, like revenue was a little unstable, but now I feel like the revenue is like much more predictable.
We were also able to get an exclusive sneak peek at how JP Morgan decked out its new headquarters with moon rocks and 40-foot rockets in the elevator banks. You could see that there, and space-themed sculptures around the lobby. However, there was another surprise that dropped last night as well, guys. S&P Global saying it would not change the rules for entry into the S&P 500, which is a blow to SpaceX by preventing it from fast entry into that benchmark. And that stands in contrast to what the NASDAQ did for quicker inclusion into the NASDAQ 100, which is seen as a tailwind for SpaceX, creating a cohort of forced buyers who track that index. However, the S&P has about 20 times as many assets tracking that benchmark than the NASDAQ 100. So it's very, very meaningful for this IPO, guys.
I think everybody stays private longer. The amount raised is getting bigger and bigger and bigger, and everybody's going to get in more quickly eventually.
All right, hold on. We have news. Holy shit. I can't believe this. Maybe I can. Google to pay SpaceX $920 million a month for compute capacity. Wow. So not only is it Anthropic paying them $1.5 billion a month, They just got another 920 million. So they're doing 2.42 billion a month between those two companies for compute. Wow. Wow, wow, wow. Now, keep in mind, these numbers are not included in the S1. So the 20 billion revenue run rate that they were on is a number that no longer works in the model. This is crazy. Is this not news? I mean, I didn't know about it. It just came out 30 minutes ago. Google has agreed to pay from October 26 to June 2029. Whoa, almost 3 years. SpaceX filing submitted to the SEC on Friday. This is new news, everybody. I didn't see it. So it's new news to me. I didn't see it. That may change things.
Were for 3 months. You had to be
Yeah.
there for 3 months before they made an exception for SpaceX. I think the S&P 500 Global is tougher, right, Leslie? You have to be there for at least a year, and you have to meet revenue and potentially
Profitable.
even earnings numbers as well.
But I think there's a larger issue.
Yeah, no, that's
which
exactly
is
right.
The larger issue I was going to say that we should be talking about is NASDAQ has a financial incentive to put it in the index so that they can get the IPO.
Right.
The question is who is the S&P does not.
Right.
So you have the people who do not have the incentive are not doing it. The people who do have the incentive are doing it. Who
so
are they serving?
You think it's a real advantage for
it's an absolute advantage
to put it in that quickly.
Yes.
100%. It is not just an advantage. It
Yes.
is. It is
Not forgetting the deal, but
it's an
for-
advantage to get to the deal because
for
the New York
SpaceX.
Stock Exchange
For
was not willing
SpaceX,
to do it.
because people need to buy it.
But by the way, this is a natural. This is an empirical experiment. You can see New York Stock Exchange wasn't willing to do it. NASDAQ was willing to do it. Okay, so who won? NASDAQ. You'll see. We'll see what the price is. But you're asking like what the incentive. You have to always look behind the curtain and
I know,
figure
but
out
you
what's
don't-
happening
You don't
here.
immediately need to think it's conspiracy.
No, I
It's
would
not
say-
conspiracy. It's,
Well, and bad
it's out in the public.
and-
It's you can see it in front of you.
Leslie, what were you going to add?
I'm a homer. I like the NASDAQ. I'm glad
Oh,
the
I was
NASDAQ
just going to
does. Go
say
ahead,
that the
Leslie.
deal is really constructed in many ways for index inclusion. For example, to Andrew's point, it creates this market of forced buyers very quickly after it goes public, which is a bullish case to actually buy into the IPO. And then they have this lockup structure to increase the float a bit quicker to make sure that it's a bigger weighting into the NASDAQ 100 index as well, which was part of their rule change. So the entire structure of the deal is kind of made
Could a retail broker, could I
essentially
call
with
up
this in mind
Leslie?
because it is seen as such a big tailwind. And then the other thing that I'd point out too is that if you do have SpaceX in the NASDAQ 100 but not in the S&P 500, you could start to see a bit of kind of performance diversion between those
Right.
two if it comprises, as it becomes a bigger and bigger part of the NASDAQ 100 but not in the S&P 500.
Could I
So that's
buy
something
100
else to keep
shares
in mind.
as a retail?
You can try. You can. There's no guarantee,
Supposedly
but
it's
he's giving more
easier,
to
but
retail.
I know he's giving more to. I can't imagine you could buy, what's it, 135? I can't imagine.
Look, there's places
that
like
an
Fidelity,
average person could buy.
Fidelity and Charles Schwab and Robinhood are all going to have some, but it
That's what I
depends on
mean.
how much
There's
the
just no way, though. It's going to be the
institutional
same.
investor buys
But then the other piece of this is you have only a 4% float. Think about that.
Right.
One of the reasons you would only have a 4% float is to buoy the stock. I mean, there's all sorts of things happening in terms of
Well, if you
how
don't
this
want-
whole thing
they-
is constructed on a relative basis to the full size of the company that are built around this. By the way, I could argue to you the idea that they are going to allow more retail investors into this. They're able to. One of the reasons, arguably, they're able to do that and think that it's going to work is because of the index buying on the other end. So typically, they
Retail investors are not as-
retail investors are considered sort of fast money that they will sell right into the IPO. If you know on the other end that you have an index that's going to be buying for you, all I'm suggesting is all of the sort of classic price discovery processes that take place in an IPO are going to diverge in this case. It's just different. This
I
is just
do
a
like that
different
he's giving
instance.
more to retail investors.
And the demand was going to be there. I don't even think you need to do anything to try to
Right.
cheat on the demand. I mean, the
retail
demand is going to be
investor,
ridiculous.
Normally, Fidelity requires that you have at least $100,000 in your account for it. I think they're dropping that level to $2,000.
You still can't. I guarantee you can't get it.
It's like a lottery ticket, right? You could,
Yeah, it's like a
if
lottery
you have it, and you
ticket.
put in for it, you may or may not. The long odds, but you might be able to get.
By the way, if I was, just to be 100% clear, if I was Elon Musk and SpaceX, I would be doing this. This is absolutely what they should be doing. There's nothing wrong with what they are doing. I'm just suggesting that the other sides of this, their incentives and their motives, are not necessarily fully aligned in the same way that you would have thought around the way they used to think about these things.
And as we have seen so many times, we try for price discovery, but you look back a year and it's like,
who knows?
Remember when Google was initially not nearly as hot as, and then look where it is.
And it depends on the fortunes of a very fast-growing company. I think AI, under the underwriter's own expectations, AI revenue has to increase 100 times. I mean, this is a fast-growing company, and it's hard to get your arms around where it's going to be in a year's time.
Great question. I feel like SpaceX, because I'm not bullish on their timelines with Optimus and FSD. But with them selling compute and Jensen coming out and saying that nobody can stand up servers the way that the SpaceX engineers can, I mean, breaking news, basis points to buy compute from SpaceX, maybe. But no, in all seriousness, I mean, I'd have to say SpaceX. Frogger Finn, what's going on? I think we all did today, buddy. It's going to be all right. Markets went down today, but you know what? They'll come back eventually. I really don't want to get involved in the SpaceX IPO, but you know what? Let's see how much it runs up. If for some reason it stays at 135, I may have to look at this as, listen, you take 14 grand and you try to buy 100 shares and you say, you know what, whatever happens, happens. Kind of like going to the casino, knowing the valuation's BS. I don't know. I'm conflicted. I hate the valuation, but you know what? The fact that Google's going to buy compute, the fact that Anthropic's buying compute, I don't know. It seems like nobody's bothered. Seems like everybody, Frogger Finn, that's not good. I mean, the fact that everybody is kind of brushing this off and JP Morgan comes out and quadruples their price target for Tesla. I mean, I don't know. I don't tell you guys. Yeah, Musk or bust. I don't know. You guys know I hate the valuation. I'd rather be buying Amazon, Meta, those types of companies. We may have to take a flyer. I'm going to really think about it. But no, I really don't want to, but It's 135 per share, 14 grand to buy 100 shares. It's 135, not 1350. All right, everybody. I'm going to get going. Thank you, everybody, for joining me. I will be live tomorrow and Sunday, and I will be making dedicated videos again. No, the valuation on Palantir was not this egregious. The valuation on Palantir got egregious. It got crazy. It was nowhere near this when it first came out. All right, everybody, you're the best. I need to go get dinner. Thank you so much. I will be live tomorrow night for all of us who don't do anything on Saturday nights, and I'll be live during the day, I believe. Tonight, I'm going to watch the Knicks game and relax and try not to work. I say that, but I'm probably still going to work. I want to make some videos for you guys also. Thank you so much. Really appreciate it. Have a great rest of your evening. I'll see you guys tomorrow. Don't forget, members only, Sunday at 1 p.m. Do not forget. Thank you, everybody. You guys are the best. Without you, I wouldn't be doing this. I'm truly grateful for all you sticking with me and supporting me. Thank you very much. And if you guys put a list together in the comments section of what companies you want me to break down, I'll try to knock through the list. Maybe I'll put a Google sheet together and we'll figure it out that way. Thank you, everyone. Have a great evening.